Bitcoin doesn't have any counterparty risk. And in building a blockchain, I think the simplest way I can think about explaining a blockchain is the design principles of a blockchain. You can solve two of three sides of the pyramid: decentralization, security, and scalability. And when Bitcoin came in and solved decentralization and security, what it created is a base layer of money. That was unhackable, gets stronger and stronger and stronger and decentralized. And it also created a lot of wealth. But it also created an attack vector for Bitcoin from a whole bunch of other things that could solve scalability and sacrifice decentralization or security. And so every one of the other coins is decentralized, is either centralized or insecure by nature of design over time. And you have to ask yourself a simple question at the end of the day. If it's going to be centralized, why wouldn't you use a database? The economic reasons for running a blockchain fall apart if you're going to centralize it. It doesn't work. So the scalability in Bitcoin comes on the second layer, third layer, and all of this stuff that comes on top. And so I've never been in the other coins just from a first principles basis. And the same thing applies to leverage, because if you're building something on top of something that's insecure or centralized by design, then you're going to have to trust that the rules are going to change. And those rules changing look like the system we live in today. And so then I go in a broader picture and say, the system we live in today, people are worrying about the unwind in crypto in general and what its effect on Bitcoin, unaware that the exact same unwind and its system effects times a million is our existing system we live in. The only difference in the system we live in is there is a central bank that'll socialize losses when banks get into trouble from over leverage. And the system has always worked that way. And it's worked that way because gold backed it. And then it created an incentive to leverage gold and then make gold a smaller portion of the holdings and centralize, and then remove gold and just have fiat for that credit. But that relied on a central actor socializing the losses when things failed. And that's the way our system works. Our entire system works today.
Bitcoin is fundamentally different. My first principles are all Bitcoin principles, not first principles about traditional financial markets. And I'll quote Nick Szabo, who blew my mind at I think it was the most important speech of last year, which was the Miami Bitcoin Conference of 2021, where he laid out that you do not need liquid markets. So you're absolutely right that all this rehypothecation and slicing and dicing and securitization and all this financialization that was brought from Wall Street into Bitcoin trading markets definitely collapsed the spread and reduced execution cost for retail. That's correct. However, at what cost to Bitcoin adoption? We have now all these bankruptcies that are occurring because of all the rehypothecation that took place. This is wrong. People got their pockets picked. Some people won from it. You're absolutely right. But Nick Szabo's point was liquidity is a nice to have, not a must. All you need is a way to exit when you need it. That doesn't mean that you're not paying high fees when you exit. Liquidity is absolutely not a requirement. Why is Bitcoin anti-fragile? Precisely because it's designed without counterparties, with decentralization for devolving power to the individuals, and applying all the Wall Street thinking to the secondary markets of Bitcoin corrupted those secondary markets. For those who are not familiar, though, I want to make it very clear, Bitcoin itself is just fine. It's immune to all of this crap.
We want to know how much we have and how much we need to achieve our outcomes in the future. Some people's outcome is safety for their family. Some people is retirement. Some people is so I look really good to friends because I drive a nice car. But it's information that tells us that and what we need to achieve our objectives. That's all it is. So why that's a really important concept is when you have misinformation in the base layer, as we do today in broadly society, the entire market function is when 12 people will press a button and destroy currency. Every house value, everything is based on misinformation of somebody granting power to somebody to socialize losses and save a system from spectacular collapse. Because if they don't, the entire system falls to the ground globally. So everybody's waiting right now as the Fed says they're going to tighten. If they continue to tighten, everything fails globally. Everybody's waiting for them to back off and loosen. That's the world today. And if they continued to tighten, your bank wouldn't be there anymore. Major banks would all fail. Everything would fail. So we all know that that's the system we live in. We grant that system a central authority to say, save us, which creates more problem. And that save us, which everybody's waiting for right now in the global market, is essentially create more misinformation and money. Now apply technology to that misinformation. Twitter, social media, YouTube, everything else. And when you have misinformation and money, which is just the thing that's connecting us, trust, connecting globally, society, when you have misinformation and you automate misinformation, it explodes. And the world is looking through that misinformation bubble. And Dave was right in how early Bitcoin is, but it is actually truth. And it's really early, and it's not this existing system with all this misinformation, it's a new system. But now imagine all of the people that are looking through the misinformation bubble, and they see somebody getting really rich in DeFi, and they're trying to escape a system that they know is corrupt. What will they do? They'll race into it. They will race into it globally. They're trying to escape a system. They don't want more money. They want to escape. They want to have enough money to live, feed their family, food. And when they see a whole bunch of people getting rich in a system with misinformation at the core, they want to try to get enough of that to escape it too. So you could if you understand human nature, if you understand what will happen as a result of this globally, you're going to get this building up over and over and over again. Well, Bitcoin just keeps on block by block, moving the system over to a new system that is priced totally different. Gold required a credit-based system because you couldn't get credit. You couldn't drive velocity in the economy fast enough by moving gold. It required centralization. The difference with technology in Bitcoin is it doesn't require centralization. The technology provides unlimited velocity. And what I just said there changes all the rules from how things looked in the past. And for the people that understand that, is why they're building on this and why the counterparty risk. And by the way, I think you guys know I started a venture capital fund in this space, and I'm investing in layer 2 and 3 solutions right now. So I'm seeing all of the stuff that's coming on top of Bitcoin. We've seen 260 companies. We've already made commitments on our first 3. I'm not going to say what they are right now. My God, some of what's coming that people don't know about that's going to bring on the next billion people onto this network. It's unbelievable. Super exciting. But that ability to build on top of Bitcoin didn't exist for a long time because it was decentralized and secure, and they focused on the first layer. So the second layer and the third layer and everything else that was able to be built on top is only just starting to emerge.
We're seeing a microcosm of problems as we try, and the companies you're working with and what Caitlin's trying to do in terms of Bitcoin adoption to get people to understand the importance of sound money is vital. Where we've got ourselves into trouble, and I say ourselves meaning the society, is people ignored principles of things like, well, why is a yield higher and what is underneath it and what's going on, and believing people who made false statements. I mean, let's not kid ourselves. I mean, if it wasn't for the Luna crisis, we probably would get another year or two before this all unraveled, but it was going to unravel. And that's the point. You don't think so? You think it was?
I understand the economic rationale for why everybody built on these other entrepreneurs went on something that you could build on with smart contracts, unaware of the base layer of the risk of that, because at least they could build on something. Once the entrepreneurs went there, they had a vested interest to sell their thing. And protect the foundation that they were built on, not because of bad people, bad intention. It's just that they could build businesses there, and then early on, those businesses did really well because they didn't know it was building on a pyramid scheme that would fail. But what's happening now, if you look at the ability on Bitcoin, just starting early, to be able to build on top of that layer, wow. People should do a lot more work and see what's happening. What's happening there, because it's a really exciting future. 1 billion people on this network in 24